Hi and welcome back to 𝗕𝗘𝗪𝗏𝗀𝗀. In this video today, guys, we're going to be taking a look at what has been going on most recently here with the crypto space. So this is going to be a slightly longer video. First of all, I want to apologize for that. Lots of things I want to kind of cover and go into in this video, so do bear with it. There's a lot of things I think are important to understand what's going on here. And, you know, other thing is to hope everyone's actually okay and doing well. You know, at times like these, the volatility can affect people mentally and obviously financially, right? So really take a good look at what is going on in the crypto space. Really analyze whether this is for you or not for you. You know, we do expect volatility. Chris and myself, we're perfectly happy with these kind of dips. We talk about them quite a bit on the channel, you know, and we kind of do see them happening, you know, and we're pretty comfortable with it, but that's because, you know, we don't overextend ourselves and all that kind of good stuff. So really make sure that, you know, you're doing okay, you're okay with your positions. Yes, they're down, right? The market is down, and I'm going to go into a lot of that in a moment. But yeah, do kind of take stock of it. This market, it isn't for everyone, and if it is affecting you personally, either mentally or financially, maybe you've overextended, then really do take a look at that. So obviously I'm not a financial advisor, I can't offer you financial advice, but do make sure that you guys are okay. Right. With all of that, I kind of just want to take a quick moment here to actually take a look at, you know, what's going on in the crypto space, right? So specifically talking Bitcoin. Let's actually jump on down into the desktop here and take a look, right? Because obviously Bitcoin pulling back, there's a few things that kind of cause you know, these kind of events, right? And unfortunately, there's been a bit of a a correlation between the S&P 500 and, of course, Bitcoin, right? And obviously with the S&P 500 being negatively impacted, has had a knock-on effect on Bitcoin. Bitcoin's pulled back. Now, obviously, we did see a 37K Bitcoin coming in. That was pretty much something that was consistent across our hourly time frame, the 4-hourly, the daily, the weekly. And, you know, there was potential to go down a little bit lower. I spoke about that yesterday. That seems to have come in. I still feel that we aren't actually at the bottom for where Bitcoin's going to go just yet. I still think there's more downside to come, and I'll go into that in a moment. But, you know, ultimately, with lots of things kind of going on with that S&P 500, that drawback, but also, you know, you've got the Bitcoin ETFs that if I can get my words out, institutional investors, you know, with a lot of players like those now kind of bigger into Bitcoin, you know, small movements within the S&P 500, the stock market, will basically make them react into the crypto market as well. So again, it's kind of all being fueled from certain different perspectives, you know, around there. Then of course you've got the Fed. We have to consider what's going on there as well. So there's a lot of things that are actually happening outside of the world of crypto that's actually having an impact on crypto, right? And I think eventually it will get itself corrected out and it will be fine. But you should be expecting some downside to this, right? So this is why I say, you know, it's important that we take stock of the positions that we're in. I'm not actually actively selling. I'm just actively buying and dollar cost averaging at this point. And I still do think that we are, you know, until invalidated, you know, we're on good ground for potentially a pretty good 2022, okay? But we are looking out for those invalidation points when Bitcoin gets invalidated, and maybe, you know, that high that I was speaking about not too long ago doesn't actually happen, right? But until that is invalidated, it's still very much in play that we are looking at all-time highs for Bitcoin. And I'm going to go through lots of things in this video, okay? So the first thing obviously is, you know, we want to be aware of the S&P 500. We want to be aware of the Bitcoin ETF and the institutional investors and, you know, the players that are involved. And, you know, we also need to be aware of what is going on with the Fed. No, not forgetting about the tapering processes either. Okay, so lots of things that are happening here in the background. But I do think a lot of that is going to get, you know, rectified, and this is all short-term stuff. At least we're hoping it's going to be short-term stuff because we don't want to be invalidated on the bigger moves, right, and the bigger picture. So obviously what you can see here in the charts and this data is effectively, you know, Bitcoin's hourly, right? And it looks pretty bad. We have that huge pullback with Bitcoin. And again, obviously, what's affected Bitcoin has affected the altcoin market as well. Lots of fear out there, or lots of opportunity, depending on how you want to look at it. Personally, me and Chris, we're looking at it as an opportunity to dollar cost average better positions on these projects. Now, obviously, if Bitcoin gets invalidated, the strategy changes a little bit. And we're in Discord with our members Patreon members, etc., to talk about how that strategy does change as and when we actually go into an official bear market. We are not there yet and haven't seen the invalidation to justify calling it a bear market, but it is feeling incredibly bearish, right? And we have to be aware of that. So for the most part, we're actually going to just actually zoom out here a little bit to the daily, because we want to kind of avoid some of that noise that's kind of going on the smaller time frames. So we really want to focus in on this. Okay, so this is our ABC move, right? We had 5 impulsive moves up here. Our move A, a B wave here, a C wave that turned impulsive, effectively making and converting their ABC into a 1, 2, 3, 4, and 5, right? So we have the 5 moves up. So an ABC down was kind of expected. Now, obviously on the daily chart here, this actually would have been really visible as an A, B, and a C. Oh, look, it was over, right? And this is pretty much what a lot of people were thinking, a lot of people were talking about. And then at this point here, when we got invalidated, this is pretty much when Matt Dixon over at advice.io decided to go super bearish, exit everything because it was invalidated. And effectively what this now looks like is a much bigger A wave with a B wave up. Again, that was actually shorter than I thought it was going to be, because I thought that was going to go up to the $58,000 range. But we only went to 52,000, and then effectively now we are looking to track down. Now the $37,000 range was an area that I thought was going to really hold out really well based on our hourly chart and our 4-hourly chart. That was a really good strong area for us. But obviously taking a look at this from a bigger macro picture, you can see that actually 31,700 or approximately that $32,000 range is the area that is a 1-to-1 ratio with our A wave. So right now you can see that we're kind of wicking down to and hovering around the 786 on the fibs, but there's a strong possibility that actually we head on down a little bit lower. And again, when we actually take a look at this on our hourly, you can already see that we're up in the overbought area, so do expect some more downside potentially on the horizon shortly. Okay, and that will then allow us to kind of see this one kind of complete out. Now in terms of invalidation, what don't we want to see? We don't want to go down any lower than our 28,700 range. Okay, so that start of our impulsive move up. In order for this to kind of really play into what is going on with a weekly chart, what we need is a good correction here, preferably not really any lower than the 35k, but I do see us moving down a little bit lower. That ABC, get that completed and then actually look for another impulsive move to the upside, right? And again, timing is the hardest thing to gauge, but no one's ever going to get the timing right. So this could play out really quickly, it could play out really slowly, right? And of course there's going to be lots of fake outs on that journey if we were to go impulsive up. Ultimately that impulsive move to the upside would be indicating that would be going to new all-time highs, and I've spoken about $77,000 in the past. That's actually now invalidated that particular price point, and because with this dip here, in order for that to kind of really be valid, we'd have to really focus in on the next move, right, to the upside. And I don't think we're ready there to kind of really take advantage of that to see how that one plays out. So obviously here, this 1 through 5 we can argue is potentially an A wave in itself, and then this correction here, as long as it doesn't invalidate, i.e. go lower than $28,000, then effectively that becomes our B wave, and then we go up higher. Now, in order to really measure this out, what we want to do is we obviously want to measure the distance using this fib, and we want it to be a 1-to-1 ratio. So let's hypothetically say that we do reach this C wave low here at 31,000. That now puts us at $76,000 Bitcoin. Okay, so really wanted to kind of just show you that yes, until this isn't validated, this is still very much in play. We are heavily oversold on our daily chart, or heading there now on our daily chart. On our weekly chart, we're already there. On our 8-hourly chart, we're already there. On the 4-hourly chart, we're already there. But the hourly is not letting us actually get any decent ground. And this is pretty much just because there's so much fear in the space on that smaller time frame. But overall, we're actually, hoping that this actually turns into a good area for reversal. And we look for 5 waves here, because if this is the start of a new trend to the upside, 5 waves, 3 waves, 5 waves, 3 waves down, and 5 waves up again, this could be the start of a really good push for Bitcoin again. So again, we want to be optimistic. We want to be thinking that there's some buying opportunities here until proven otherwise, which won't come in until we drop down lower than $28,000 if that were to actually happen. So obviously we want to be aware of that. Now, in terms of bear markets, if we are in a bear market, we need to be aware of how low this thing's going to go, right? That seems pretty standard thing that everyone's going to want to know. Do expect an 85% drop, as pretty much that's the standard for Bitcoin. It doesn't drop as low, it drops lower for altcoins, but Bitcoin's about 85%. On average. It does vary a little bit, but basically that would bring Bitcoin to $10,000. Now, obviously, I've spoken a lot about in the past the 𝗗𝗂𝗪𝗓 channel and various other things, right? And there's a few things about Bitcoin history that you just need to be aware of, right? Never in Bitcoin's history, although it's very limited and very small, it's not a huge data set, never in Bitcoin's history have we seen after an all-time high, a bear market take Bitcoin's price lower than the previous high. Okay, so for Bitcoin to go lower than $20,000 effectively is saying that, you know, scrap history, we're doing something different. And this is very, very possible. And this is something that we saw with the 𝗗𝗂𝗪𝗓 channel, right? If we actually throw this up into this chart here, let me just throw on the 𝗗𝗂𝗪𝗓 channel. The 𝗗𝗂𝗪𝗓 channel was a fantastic indicator for bear markets, right? We basically effectively saw a closed candle inside the 𝗗𝗂𝗪𝗓 channel. We pulled down, and that was that. You're in a bear market. Same thing for 2017. However, since the pandemic, we've had something different occur. We got pulled into the 𝗗𝗂𝗪𝗓 channel. And then we got closed above, and then we pulled down rapidly afterwards, and then we continued the run to the upside. Now, in terms of what happened here, and the reason that I haven't been speaking about the 𝗗𝗂𝗪𝗓 channel so much is there's one candle that bothers me, and it's that one right there. It shouldn't have actually occurred. We closed inside the 𝗗𝗂𝗪𝗓 channel. The expectation is that we continue to close inside the 𝗗𝗂𝗪𝗓 channel. Instead, what happened here is we closed inside it, and then we closed above it. And that one candle invalidates the theory that by closing inside the 𝗗𝗂𝗪𝗓 channel, it leads to a bear market, right? That should never have happened. Now, obviously, we've seen what happened afterwards here, and we have continued to come down. So effectively, you know, the theory could still be very much intact, and it could be that, yes, the second that you close inside the 𝗗𝗂𝗪𝗓 channel, it leads to us falling down even lower into the bear market, despite maybe even having a closed candle above the channel, right? But it's too soon to really call it, right? And which is why I haven't really been talking about it. I needed to see a bit more data. And it's looking very much like that right now. But also, you know, we cannot take this indicator in isolation. We need to take it into consideration with other technical indicators as well. Okay, so just because in the past it has happened this way doesn't mean it's not going to happen again. And the same reasoning can be said to lie with an 85% pullback taking us to $10,000 Bitcoin. It's possible, even if it hasn't happened in the past, because the data just isn't there. It's not a huge data set to really rely on heavily. It's not like the traditional stock markets, where there's an abundance of data. So we are limited by what information that we do have. So obviously, if this is the low point, or if this is in fact the all-time high at 69k, it doesn't go any higher, then, and we go into bear market, then do expect 10k Bitcoin, right? That's kind of where the bottom would be. I'm not actually there yet because we haven't seen the invalidation. The 𝗗𝗂𝗪𝗓 channel here has created us an anomaly that doesn't exist in the history of Bitcoin. So we have to be aware that we have to take everything here as something new, something that hasn't happened before, which is great and exciting, but doesn't really help us, try to really be predictive over what is going to happen next. Now, obviously, we can take a look at several other things. Okay, so as I said at the beginning of the video, this is going to be a longer one. So obviously we oversold on our stochastic RSI. Okay, and actually what we do here is we can take a look at this low point that we had back in June, July 2021. We were heavily oversold for quite some time, right? And it's very possible that actually we start trading sideways around here before starting to get some decent ground back to the upside. Okay, so we are oversold on our weekly stochastic RSI. That's a good sign. It does mean that we are likely to see a bounce. Okay, a bounce doesn't necessarily mean that we're going to all-time highs, but it does mean is that if you're stuck in a position right now, you don't have to sell at the bottom. You can, of course, sell on a bounce. Okay, so what I'm going to do is I'm going to shoot on over into this 2017 bull run here. We can see here that we had a 69% pullback, very rapid pullback, right? And then we bounced up. Okay, and after that bounce up, we can see that actually the difference, the net difference here was actually only a 40% drop from the all-time high. Okay, so if we're in a position where we're thinking, oh crap, I'm stuck in a position, I need to get out of it, waiting for the bounce is a very valid thing to be doing. Okay, and this allows you to then actually gain some ground, not take such a big loss, and carry on, right? Or dollar cost average, or do some active trading to kind of boost things up. Obviously, I'm not a financial advisor, I can't offer you financial advice, but selling at the bottom just it isn't a wise idea in my humble opinion. So obviously when we take a look at this, we can see that we were oversold on that stochastic RSI. We actually got a small bump here, taking us into that bounce, and then we basically just started to waste that stochastic RSI, and this is going to be the indicator to be looking out for, along with that Gaussian channel, as potentially we start to really rapidly move this weekly stochastic RSI. That's going to be the indication to say, yeah, we're probably not going to go up all too much further, because the momentum just isn't there. Okay, but you know, we're going to be watching that very, very closely. I'm expecting quite a bounce here at this point, to take us out of these lower ranges once we actually find the true bottom. Okay, cool. So now we've got a good idea, right? We do expect some volatility on the smaller time frames. We haven't had the invalidation yet for Bitcoin in terms of the bigger move on the daily chart, moving up towards that $76,000 Bitcoin right now. So that's kind of still something that we're looking forward to. Of course, you know, the RSI is supporting a move to the upside to that kind of level, and there is, of course, a lot of stablecoin on exchanges sat there waiting, and that could be a big trigger for a big bounce to the upside soon. So do watch out for those kind of things as well. So the next thing I'm going to want to really bring up is going to be some Glassnode data, right? Because Glassnode is going to be a really good indication of what is actually going on exchanges, right? Whether we should be concerned, whether we should be incredibly fearful, or actually whether or not we're being duped into selling early and actually things are going to get a reversal, you know, as indicated with the Elliott wave, you know, potentially $76,000. And again, as indicated, I'll go into a different chart in a moment, but you know, across history of 2017's bull run, there's some interesting stuff as well. So with Glassnode, there's a couple of reports you guys must know that I really like. Obviously, it's the exchange based. So the first one obviously is going to be the balance of Bitcoin on exchanges. Now I've got this just focused in on 2021 into 2022 here, and obviously you can see that during 2021, or at least the beginning of the year, the balance on the exchanges was decreasing, right? We had a decreasing amount of Bitcoin on exchanges. It was leaving. And then, of course, we had that crash, you know, April, May time, and the balance on exchanges was increasing as the price of Bitcoin was pulling down, okay? So as the price of Bitcoin goes down, the balance on exchanges goes up because people are selling, and basically it's just going straight onto an exchange ready for resale, right? And that's kind of what you see here. And basically, this high point is basically when Bitcoin was at the bottom in June, July of 2021, right? Once it was down at $28,000, that was the most point, or the point with the most Bitcoin on exchanges, right? It was back then when it was at the lowest point. Then, of course, you know, Bitcoin's price started to move up, and the balance on exchanges started to decrease as people were buying it and putting it into cold storage. Okay, so what you're looking at here is a build-up of people loading up the exchanges and selling it off, and then buying it back and storing it onto cold storage. Okay, then we get into October. Price of Bitcoin starts to move up. That's the gray line just here, and the balance on exchanges increased, which was odd, right? Okay, so there's a couple of reasons you could explain this. You could explain it from people maybe being cautious and wanting to make sure that they can capitalize on any potential bounce and sell off early. Or you can ask or argue that actually it's a few whales loading up the exchanges, maybe ready to manipulate the price so that they can accumulate more pockets of liquidity. Okay, we actually saw this with 2 points of interest, right? And the reason that this is really interesting is basically we had Bitcoin reach $67,000. Okay, then we had Bitcoin reach $69,000. Okay, those two prices, according to Binance, were exactly to the penny, which was odd. Okay, you can understand it to a point, maybe huge selling pressure or whatever. But at that point there, we also started to see that the Bitcoin on exchanges was decreasing, and that was odd because we had the all-time high at 67k at the time, and we pulled down, and as the price pulled down, so did the amount on exchanges, i.e. maybe some whales actually took some off the exchanges at that point, and you know, stored it. Then of course we pushed up again. Balance on exchanges was decreasing as expected, and then as the price has pulled back, we've seen the price or the balance on exchanges decreasing. Okay, then you saw it kind of come up a little bit with some fear kind of seeping into the market. I imagine this is more retail investors. And then again, as that price continues to drop, you've seen a continuation of balance of Bitcoin on exchanges decreasing. Okay, the opposite of what you'd expect. Just look back at May, what you'd expect to happen. Bitcoin's price goes down, balance goes up. Okay, so the data here is illogical. It's not what you would expect to see in terms of what is going on with Bitcoin on exchanges, right? So be very aware that right now we have a huge decrease in price and the amount of Bitcoin on exchanges is decreasing. It's not increasing. This is actually a strong argument to say that we're going to have a pretty good bounce to the upside and that actually we're hodling. A lot of people are hodling. They are not selling their Bitcoin right now. Okay, so there's a lot of fear in the space. And it's being, compounded by lots of different, people across various different platforms, lots of news outlets, all sorts of various different things. But this is actually really encouraging because it's basically indicating to us that although the price of Bitcoin is going down, also is the balance on exchanges of Bitcoin going down. So effectively, there's less Bitcoin for sale now on exchanges that the price is pulling down, and so it's illogical. You wouldn't expect to see this. You would expect it to be the other way around, and this gives us a lot of confidence in what the Elliott wave is also telling us on the charts, that a B wave low looks like it's coming in, and then we should be looking to kind of progress to the upside. Now, obviously, here we have to be cautious with obviously the invalidation points that I spoke about earlier. If that does get invalidated, it's not an ABC up, right? We need to really be objective about what comes next under those scenarios. Now, the other thing I want to kind of bring up is back into the charts here, and I'm going to just hide the Gaussian channel, and what I'm going to do is I'm going to zoom out. I've spoken about this a few times already, but in case it hasn't really sunk in, or maybe you weren't necessarily watching this particular part of the video before, this 2017 bull run, we had a really nice, good sweeping look to it, right? It swept nicely to the upside, except it didn't really. Instead, retail investors were being shaken repeatedly to drop Bitcoin, effectively holding them by the ankles, shaking them upside down, waiting for the Bitcoin to drop out of their pockets or whatever, right? And the reason for this, as you can see, we start the bull cycle and there's a 37% pullback. We then push up and we pull back 42%. We push up, we pull back 40%. We push up, we pull back 35%. We push up, we pull back 34%. We push up, we pull back 40%. We push up, we pull back 39%. We push up, and then we pull back 70%. Okay, and that's the bear market trigger. So the reason that I bring this up again is 37, 42, 40, 35, 34, 40, 39. Those are pretty standard Bitcoin corrections, right? Now, if we actually go ahead and look at the 2020 run, we've been incredibly fortunate. We haven't had huge pullbacks. We had one at 21%. We had one at 32%. There's a little tiny blip in there. I mean, I can measure that. What is that? That's like another 25% there. Then we had a 56% pullback. Okay, so a little bit over exaggerated. Now, we obviously know that there was the Wyckoff distribution pattern going on there anyway, so maybe there was a big play. Rather than just constantly shaking out retail investors, we'll just do this big play and maybe that was that, and then they took it up. Then we had a 24% pullback, and then we set those two all-time highs, and now we are tracking a pretty substantial pullback. I'm not going to lie, it's right up there. It's at 50% so far, but it isn't out of the ordinary, is my point here. Even in the 2017 to 2018 bull run, we saw numerous times when retail investors were shaken out of Bitcoin. This is now the high. Fear, and more fear. Okay, and I like to think that maybe as retail investors, we're wising up a little bit. Maybe we're getting a little bit tired of institutions and whales just basically taking the absolute piss out of us, right? And I think they've maybe changed strategy a little bit, but ultimately I think whilst retail investors still put themselves in vulnerable positions, they are still going to continue to do exactly these things, right? They're still going to take advantage of liquidity pockets, etc. So what, as retail investors, one thing that we can do to obviously help ourselves and to make ourselves better going further forward is something that I learned the hard way many years ago. Don't touch leverage. right? Leverage is bad. It's really bad. And as a sort of result of that, it's kind of a more of a gambling mentality. And the result is simply that you are more often going to lose than gain. Okay, your positions are very visible to everybody, and as a result of that, pockets of liquidity are created. These are where effectively you become liquidated, and basically prices can be guided into those pockets, and accumulation for whales can be had at your expense, right? And you want to avoid those things the best you can. Now, I don't think we're ever going to get rid of leverage, and there's always going to be people who want to kind of have that mentality of, utilizing leverage because they can multiply their gains, psychologically. But as I said, time and time again, history does tend to repeat itself with leverage, and it gets used against you, not for you. Okay, so hopefully, in time, more retail investors will wise up to the damage that leverage can do. Okay, not just for yourself, but obviously for many other retail investors as well. Now, obviously, on this channel, on what I do and what Chris does, is we buy the asset, right? If we can't afford it, you can't afford it. Buy a fraction of an asset, right? Anything is better than nothing at the end of the day. And basically put it into cold storage, right? There's a link in pretty much every video that we have here for Ledger. And we just store it into cold storage, lock it up, and we control that asset, right? We dictate when that asset is sold, not when a price reaches a certain point, right? Having and owning those assets and keeping them under your control is absolutely vital. It prevents these whales, these institutions, from really taking advantage of you in terms of liquidity, pockets, etc. So really important that we kind of get on board with those things as a collective group of retail investors, right? We want to be kind of wise up to that. Now, in terms of my expectations here with Bitcoin, until invalidated, my stance is very clear. We should be expecting new all-time highs, but there is some downside before we get there. This could be several months down the line in the future, which is probably the truth of it. We're expecting some downside that's probably going to take another week or so before it really truly bottoms out. From there, we're probably going to trade sideways for quite some time, and then we're more than likely going to move up again into those really good positions. Now, timing is obviously the hardest thing to gauge, and hopefully, I'm wrong and thinking it's going to take months, maybe it'll take weeks, but at the end of the day, no one's ever going to get that right. It's going to be incredibly difficult to be that predictive. But until invalidated, the position is quite clear. We should be expecting a C wave up. Now, not all projects, and why I haven't actually done any TA just yet on some of these altcoins, but do expect more to follow, is that a lot of them have been invalidated and are looking incredibly bearish, right? But inside that, there is opportunity. So I'm going to spend some time going through a lot of altcoins, and I'm going to be doing lots of redrawing to find out where things are likely to go on those altcoins and what to expect potentially next. So do watch out for those videos that will be dropping soon. And if you want some more kind of up-to-date kind of analysis, then join Discord. Links in the description down below. It's completely free. You'll find a fantastic community talking crypto 24/7. So check that out. And if you're looking for more about strategies, accumulation, bear markets, all that kind of stuff, check out the links to Patreon down below. We do 2 AMAs a week with our Patreon members, so check that out, and we'll advise you on what we think is likely to happen, within those AMAs as well. So guys, I'm going to leave the video there. I know it's a slightly longer one, but I really wanted to kind of go through what is going on the shorter time frames, what's going on the side of the medium time frames, what I expect to happen based on the history of Bitcoin, why I don't look at the Gaussian channel right now, and what might actually come next, what's going on with Glassnode data, the kind of stuff that's going on there that isn't quite right. I've spoken about this time and time again, but hopefully now this is starting to make a little bit more sense to you with where we're going, and where I do see potential reversals, where I see the invalidation points and all of that kind of good stuff. If you found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with absolutely everything that we do here at Cheeky Crypto. With that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.